Welcome to Market Thoughts for December 9th, 2019. I am Rick Zeek, an advisor here at Southwest Investments, and joining me is Bart Shanup, co-founder and president of Southwest Investments. Good morning, Bart.
Good morning, Rick.
How are you doing this morning?
I'm doing terrific.
Excellent. So last week we had these great job numbers
Yes.
that were reported, but we have bad news. So how can good news be followed with bad news?
Well, let's start with the good news. So, the November employment figures came out, and we showed a net job gain of 266,000 new jobs, which is terrific. That lowered our unemployment rate back to 3.5%, which is the lowest rate since 1969. So we've had that a couple of times throughout this year of 3.5%, and we're back down again at 3.5%, which is terrific. Now, what's hidden in there is as we look at the chart, you can see anytime we have unemployment numbers go below 4%, it's almost always quickly followed by a recession. Now, it doesn't have to be 4%, that's not the number you can see on the chart, but anytime unemployment stops falling and turns, that's usually a recession shortly thereafter. And so obviously we've now had, and this is an amazing number, we've had 110 months of net job growth consecutive. 110 consecutive. What's also hidden in those numbers are wages. So wages have increased 3.1% year over year. But if you dig in deeper, Rick, you'll see lower earners actually had a 4.25% increase year over year, and higher earners only 2.75. So an average of 3.1 sounds terrific, but what's best is lower wage earners, which obviously there's more of than higher wage, have had a higher growth rate, and that hopefully will push back a recession as consumers spend.
All right, that's very interesting, Bart. Thanks so much for your insight on that, and thank you for joining us today. We look forward to seeing you again next week. Thanks so much.